Unlock your financial future. Lessons from Warren Buffett. Did you know Warren Buffett bought his first stock at age 11? Imagine the power of starting early. Let's explore how you, as a new investor, young adult, Buffett fan, or finance student, can learn from the Oracle of Omaha himself and build a solid financial future. Many believe investing is only for financial wizards or requires constant market monitoring. This couldn't be further from the truth. Investing can seem intimidating, especially when starting out. But with the right knowledge and mindset, anyone can succeed. New investors often face challenges like lack of knowledge, emotional decision-making, and pressure for quick profits. These misconceptions can lead to costly mistakes. Understanding these pitfalls is the first step towards building a successful investment journey. Warren Buffett's investment approach is built on timeless principles. At its core is value investing, finding fundamentally strong companies undervalued by the market. He emphasizes long-term thinking, encouraging a buy and hold strategy, not market timing. Buffett stresses understanding the businesses you invest in, not just stock prices. He seeks companies with competitive advantages, strong management, and clear visions. This business-like approach enables informed decisions and long-term success. Risk management is crucial in Buffett's approach. Investing involves risk, but discipline and patience can mitigate it. Set clear goals, diversify your portfolio, and avoid impulsive decisions based on short-term market volatility. One of Buffett's most impactful secrets is the margin of safety. Buy companies at a significant discount to their intrinsic value, creating a buffer against potential losses. This reduces risk and increases long-term gains. Buffett's margin of safety is tied to his value investing philosophy. Be patient and disciplined, focusing on a company's fundamentals, not short-term trends. This leads to informed decisions and long-term success. In practice, margin of safety means waiting for the right opportunities, thoroughly research, analyze financials, and understand a company's market position. This mindset avoids market hype and aligns decisions with long-term goals. We've covered Buffett's principles, investing misconceptions, and the margin of safety. Applying these lessons will help you develop an informed, disciplined approach. Remember, financial literacy is a journey, not a destination. Ready to take control of your financial future? Start by researching companies you understand and believe in. Develop a long-term investment strategy and stick to it, even when the market gets volatile. Don't forget to calculate your margin of safety before investing. Share your thoughts on Buffett's strategies or your own investing experiences in the comments below. And for more insights, check out our video on Top 5 Investing Strategies for Beginners. To kickstart your investment journey today, VIP Indicators bio link.